สวัสดีครับต้อนรับเข้าสู่รายการพิเศษ FINNOMENA X Franklin Templeton การจับมือครั้งสำคัญที่จะรวบรวมข้อมูลด้านการลงทุนจากระดับโลกนะครับมาแชร์ให้กับนักลงทุนชาวไทยวันนี้นะครับพบกับผมทัชพล ปาละบรรจง Portfolio Specialist ของ FINNOMENA ครับในปีที่แล้วเนี่ยเราเจอกับวิกฤตโควิด -19 นะครับที่ทำให้เศรษฐกิจทั่วโลกเนี่ยมันเกิดการชะงักตัวลงไปนะครับแต่ว่าตั้งแต่ต้นปีที่ผ่านมาเนี่ยดูเหมือนว่าแนวโน้มเนี่ยมันจะดูดีขึ้นนะครับเนื่องจากว่าการมาของวัคซีนนะครับดังนั้นเนี่ยมุมมองด้านการลงทุนเนี่ยอาจจะมีการเปลี่ยนแปลงไปวันนี้เนี่ยผมก็ได้เชิญผู้เชี่ยวชาญด้านการลงทุนจาก Franklin Templeton นะครับที่จะมาร่วมตอบคำถามที่เราได้รวบรวมจากนักลงทุนของ FINNOMENA นะครับวันนี้นะครับก็พบกับคุณ Ajay Dayal นะครับจาก Franklin Templeton ครับWe have the several questions from our audience that we have been collected. Could you please help us answering the following questions about the global market outlook? For the first question is that which market cycle are we in and how should an average retail investor position the portfolio and asset?
Thank you for the questions. I think we're in a very much a value recovery market now. In 2020, what led equity markets to rise? Let's talk about equity markets. And what led was technology and growth stocks. The world was trying to look 6 months forward. Investors trying to look 12 months forward and say, what are the stocks that could do well? And the companies that benefited from the pandemic. So companies like stay-at-home companies, the Amazons, the food delivery companies, right? These kind of companies did very well, the supermarkets. However, what are the companies likely to do in the recovery period as global economies start to recover after pandemics? It's likely to be the more consumer-oriented companies, the machinery companies, the companies which are linked to the economic sensitivity of a country. So we think, restaurants, airports, airlines, transport, these are the cyclical-orientated aspects of the economy, which we believe are going to take more of a rebound. Consumer spending is going to increase, and therefore consumer spending stocks are going to be a beneficiary. So that's where we see it. And to answer your second part of the question, how do you balance your client's portfolio? How should they invest? They should be cautious. They should also think about equities are going to offer very strong long-term opportunity, we believe. Many companies in the world are going to be earning much better money, and that's going to be reflected in their profitability, which means somebody's share price is going to go higher potentially. However, the vaccinations around the world for COVID are going to take time, and some economies are going to be faster than others. Stop, start, depending on if there's any new variations in the COVID virus. So for that reason, it's not going to be a smooth journey for equity markets. There is going to be pullbacks. So I think investors are wise to have a balanced portfolio and have some, potentially bond funds, which are earning nice income in there as well, to give them a balance in their portfolio should equity markets take a hit.
Okay, even though there is a positive outlook for the global economy, but the investors should be cautious about the outlook because some challenge the vaccinations. For the second questions, as we have seen that there is a stock market corrections week ago. The investor may concern about that. Do you think this time there will be a big corrections in the stock market or not? And when does it likely to occur?
Absolutely. I mean, this is the key question. It will not be a smooth journey. And, yes, the equity markets came down a little bit. Maybe some of the heat from valuations came off. And some of those expensive, more technology stocks, maybe there's been some profit taking by investors. They're saying, should Tesla be valued at a certain price? Should Tencent or Alibaba be valued at a certain price? And maybe investors have made so much money there, they're taking a little bit back and saying, how can we now invest into companies which are more linked to the real economy? Engineering companies, machinery companies, consumer companies. So you're seeing a little bit of that money go into different types of stocks in the equity market. And that's why they've come down a little bit. But actually, even in the US this week, we've seen a strong rebound in equity markets. There's a lot of positivity. There's a lot of growth coming through. So vaccinations are very important. The speed of vaccinations around the world is very important. And the more and the faster that happens, the more individual economies can open up. And as they open up, they can also benefit from that kind of recovery to their economy and recovery to their equity markets. But remember, equity markets are not looking at what's happening now. They are looking at what's going to happen in 6 months' time, 12 months' time. And the equity markets are saying the world looks a lot better in 6 or 12 months. And therefore, they're buying now.
Yeah. For the third question is very interesting as we got the new president, Joe Biden. Can you share the view about the massive stimulus plan, as you just mentioned, about 1.9 trillion? If that is the case, how should we invest? And it could be to create the bubble or not.
It's a very good question. Look, we don't think it's the $1.9 trillion of extra fiscal spending is going to create specifically a bubble. There is so much pent-up demand to spend, right? People have not only are going to benefit from this new fiscal expansion by President Joe Biden, but they're also benefiting from the fact that for the last year, maybe they've reduced their credit card bills. Maybe they've reduced their debt on their homes. And so they're sitting on more wealth, more assets. Plus the equity markets have gone up. So people around the world may not, especially within the developed markets, they may be feeling, okay, 2020 was a difficult year, but financially, I'm not that badly off. And therefore, they want to go, they want to travel, they want to spend money, they want to eat at more restaurants, they want to buy a new car. And so there's going to be more economic activity. Inflation will go up, inflation will rise. But the question is it will rise for two reasons. One is because economic activity is increasing, but there's a lot of underemployment, right? There are still many people who don't have a job and they've still lost a job from 2020. So they need to be hired back. So the spread of that money can benefit more people. So inflation will rise because there is more people buying things, but it will also rise for a second reason. Because 1 year ago, we had a low point in the global activity in the world. Prices went down, commodity prices went down, oil prices went down. And so if these things are lower 1 year ago, when you work out inflation 1 year later, the base has gone down. Therefore, the numbers are going to look higher for a while, but then it will start to normalize. That's our thesis.
Okay. As you mentioned about the inflations, as the Fed used inflation as the target to create the monetary policies, if it start to tightening when the inflations look better, where does the money will go?
Yes. And just a key point of that is the money is not all been going to the consumer. So the fiscal expansion in the US, the extra 1.9 trillion, is not just going to the consumer. It's going into infrastructure building as well. And that infrastructure, building of new infrastructure, better electricity grids, better water systems, solar farms, wind farms, this is all going to lead to long-term growth. Not money just for this year, but money for the next decade, right? So what's going to happen to interest rates? If inflation starts to rise, the Federal Reserve in the US may decide to increase interest rates, but it is going to do it so very slowly. It does not mind, the Federal Reserve does not mind if inflation goes above its 2% target. So even if it goes above the 2% target a little bit, and right now it's lower than that, it will not mind because it realizes the economy is coming out of a slump, a deep slump. In Europe, it's even worse. The European economy is going to take even longer to recover. And so, the ECB, the European Central Bank, will keep interest rates lower for longer. Central banks around the world are going to be very cautious when it comes to increasing interest rates. They do not want to kill the economic recovery. But if interest rates do rise, even gently, and you're seeing that because of the bond yield is going up, where does money go? Well, money is starting to go back into emerging markets, into Asia, into Japan. And this is a good thing to see, into Europe. So it's good that the money is not just all sitting in the US. Investors are looking around the world, Thai investors, Hong Kong investors, Singaporeans, saying, where else can we make investments? And they're looking around the world, and Asia and emerging markets, their companies are starting to return to health, make more money, very attractive long term.
Okay, you just mentioned about Japan. We got the questions regarding to the outlook for Japan economy in 2021. Which sector has the most potential to generate the returns in Japan stock market?
Yeah, the Japanese stock market is a very cyclical stock market. It means that many of the companies within the stock market are businesses that are linked to economic growth and to global growth. So they are the exporters. Think of companies like Sony and Nintendo. Think about the big banks in Japan. You know, these companies are benefiting from economic recovery within Japan and growth outside of Japan. Think about the big car makers like Nissan and Toyota, right? So these are the companies that have not had a great performance for a few years. You know, the technology companies have done well, like Nintendo had a fantastic period. But what we're now starting to see is more consumer companies improving, machinery companies, electronic companies, banking companies, shipping and chemical, those kind of companies, which are often export orientated, they're doing better. And as the Japanese currency looks a little bit weaker, they'll also benefit from that. The other reason why Japanese companies are going to start to look more attractive is because they've improved their corporate governance code. You know, the government of Japan has been saying to Japanese companies, you are all too conservative. You keep too much money. You play too safe. You need to start to grow, and you need to start to use your balance sheet better to grow. And that means more earnings possibility for shareholders like us. So the opportunity to invest in Japan is getting more interesting, and we should see a good economic recovery in Japan this year.
I think we have covered a lot about the macroeconomic. I would like to ask you about the asset allocation strategy for Franklin Templeton over the next 12 or 24 months.
Yes, so look, I think what we have at heart is we are cautiously optimistic. We are optimistic, first of all, that the world recovery is taking place and the economic recovery is taking place. So what does that mean? We want to be invested in more risk assets. So a risk asset is something that you take a little bit of risk for a higher return. And so we see that equities offering us an opportunity. So over the next 12 to 24 months, we're going to be increasing our equity exposure, and we're going to widen our equity exposure. We've already been invested in equities, but what we want to do is make sure that we're investing in some of those value sectors, the sectors that I mentioned, the material companies, the commodity companies, the energy companies, the banking companies, the consumer group companies. Why? Because there's going to be economic growth. Think about it simply. As the economy starts to grow, people start to get wealthier, and where we're going to see some of that is people's purchasing habits, cars, new houses. So that's going to lead to improvements in building companies, housing companies, house builders, car manufacturers, people who make machinery, washing machines. So, you know, TVs, we're going to see a lot more consumer spend happening. So we want to make sure that the portfolio has enough stocks and investments in those type of companies that are benefiting from the economic recovery, the real economy. So we call those economically sensitive stocks. So we'll be adding and we'll be looking for funds or managers who can do that more. So within the Franklin Templeton family, we have a number of value managers who effectively invest more in that area. as opposed to purely growth stocks, which are maybe more technology or growth orientated or biotechnology. So there's going to be a growth. And so we're balancing our portfolio, allocating more to some of those value stocks. Also within emerging markets in Asia and in Europe. It's been very US driven, the stock markets for the last few years, but we're starting to see real economic activity from a low base rising. So we're going to see more improvement in emerging market stocks and Asian stocks. Why? Because profitability is going to rise. And then linked to that, we also think there's going to be a great demand for income. So we're going to make sure we allocate to sustainable income investments. So companies that can pay an attractive income, not just this year, but next year, the year after. So equity income is a good way. Finding companies that with a healthy dividend, we want to find companies like that and allocate more to those kind of healthy dividend paying companies. And we are also looking for good bonds that offer flexibility. So bond managers that can give us attractive yield, maybe in the emerging markets or high yield space where the yield is slightly higher, but secure against, especially if you're very selective, secure against what you're paying and higher than what you're receiving, maybe in the US and in Europe. But at the same time, we're also looking at, bond managers that have the flexibility to use, interesting techniques to be flexible around the marketplace. Maybe duration management, maybe interest rate sensitivity management, maybe using currency markets to ensure that they can maybe take advantage. Because in this global environment, currencies will be going up and down. There will be opportunities there as well. So smart bond managers, flexible bond managers, emerging markets, high yield, US high yield offers us a bit more of a yield, but the earnings of these companies is improving. That can support that. And also in the equity markets, a movement into companies which have got a strong connection to the global economy.
Okay, thank you very much. I think we have covered a lot of
Pleasure.
interesting topics about the global market. Before we ending these sessions, do you have anything to say for the Thai investors?
Yes, I suppose the first thing is it's been a very difficult period. And if you look domestically in your own economy, it's been difficult in many ways. Interest rates are at 0.5% by the Central Bank of Japan, Central Bank of Thailand. But what we're recognizing here is that although domestically, in UK, in Europe, the economy looks weak at times. You have to think forward. You have to say, how could the economy look in 6 months' time, 12 months' time, 2 years' time? And that is what equity markets are trying to think about. How does the world change and improve? So although we may feel cautious, and we are right to feel cautious, the world has been very unpleasant for the last year. However, when we think about making investments, we have to think longer term. And slowly but surely, we should be allocating a little bit more money into those areas that we feel could benefit from the global recovery and companies generating more profits, but also, governments creating new infrastructure, new assets, helping to create jobs. The wealth effect around the world will improve. It's hard to see right now, but it's coming through slowly but surely.
I strongly believe that the presentation today is very valuable for the Thai investor. Thank you for your time and joining us. Maybe if next time we have the chance to talk, could you come to share us about the interesting stuff about the global market economy? Okay.
Love to. Thank you for having me on the call.
Okay. Thank you. Bye bye. Have a nice day.
Thank you very much.
และนี่คือการตอบคำถามที่เราได้รวบรวมข้อมูลนะครับจากนักลงทุนของ FINNOMENA โดยคุณ Ajay Dayal จาก Franklin Templeton สำหรับนักลงทุนที่สนใจรายละเอียดเกี่ยวกับด้านการลงทุนระดับโลกนะครับสามารถติดตามได้ใน FINNOMENA.com/FranklinTempleton วันนี้ผมทัชพล ปาละบรรจง Portfolio Specialist ของ FINNOMENA และทีมงานขอลาไปก่อนครับสวัสดีครับ